Hello and welcome to the CNBC-TV18's Mumbai studio. I'm Sonal Bhutra and you're watching MF Corner. Well, on the show today, we are going to talk about investments in the mutual fund industry, the trends in smaller versus big cities, industry's assets under management that has crossed the 50 lakh crore mark, of which B30 cities account for a sizable chunk as well. But what is exactly happening here? How can we ensure more distribution to smaller cities? And what will growth look like going forward? Let's welcome experts on the show today and get in Rushabh Desai, the founder at Rupee with Rushabh Investment Services, and Abhishek Tiwari, Executive Director and Chief Business Officer at PGIM India Mutual Fund. Gentlemen, good afternoon. Thank you so much for joining us today. And you know, this is an interesting topic because we've been seeing the contribution or distribution going to tier 2, tier 3 cities as well. Rushabh, let me start with you. The mutual fund industry has seen a lot of growth, but how much of it comes from T30 and B30 cities, which is the top 30 and below the top 30 mark? Split it up for us in terms of metros and smaller towns as well.
Hi, Sonal. Thanks so much for having me on the show. As you correctly mentioned that, mutual fund industry has grown substantially over the past 5 to 7 years. Currently, as we speak, the total assets of the mutual fund industry lies at around 55 lakh crore of rupees. You'll be surprised to know that from March of 2023 to March of 2024, we have had a substantial growth of 35% in terms of in absolute terms. Of course, let's not forget that B30 has contributed substantially, but it still remains under the mark at around 18%. And top 30 cities contribute around 82%. So it's around 45 lakh crore comes from the top 30 cities and around 10 lakh crore comes from the beyond top 30 cities. Now, here's the thing. The most interesting part is that, 52% of the top 30 city assets are into equity. But this is the most interesting part. Around 84% of the equity assets, come from, the B30 cities. So the penetration of equity from the B30 has increased tremendously over the past few years.
Okay, so we have been seeing higher contribution coming in. But let's talk to Abhishek now. I wanted to understand how has your distribution changed for your products, say in metros versus smaller cities? Are you seeing more growth coming in from tier 2 and tier 3 markets? And what has led to that?
Thank you, Sonal. First of all, absolute pleasure to be on the show. This is something that I've been watching from the sidelines, but to quickly answer your question and what Rushabh has already given as a landscape and a color to T30 versus B30, it's been a very, very interesting ride from under 1,000 crore of assets in, let's say, 2019 in equities for us to about 22,000 crores and upwards as we talk today. If I was to break it down into T30 versus B30, we used to be under 14% of B30 ownership, which has moved to now substantially over 20% ownership. So it's been a fairly interesting ride for us from the B30 corner, if I may say so. Within that, I think from a product mix perspective, Sonal, to be very honest, exactly what Rushabh said, it's been an equity journey all in all from a B30 perspective. Within that, I think something that the MF industry and all of us have to own up to is being able to educate. And while mutual fund sahi hai is a very popular term, but क्यों सही है, कैसे सही है और कितना सही है, वो समझाना बहुत जरूरी होगा. So I think that aspect will be very, very important for us to be able to drive. So it's been performance chasing, but having said that, incrementally equity is been the word in the B30.
And comparing it with debt, it's easier to understand. Of course, not everyone gets it right, and that's why everyone goes to wealth advisors or mutual funds. But as you pointed out, it's equities where everyone is focusing on right now, and that's where more awareness is needed, how to diversify their portfolio as well. Rushabh, let me come to you. Is there a state-wise data available? Which states are the most active when it comes to mutual fund investments?
Sonal, Maharashtra contributes the highest at this point of time at around 41% of the overall assets. This is followed by Delhi, Karnataka, Gujarat, and West Bengal. But again, as I mentioned earlier, that B30 has really contributed tremendously. So over the past 1 year, Uttar Pradesh and Madhya Pradesh have contributed the highest in terms of percentage growth, which is beyond 40%. So, although we are very much underpenetrated, but a lot of awareness has come in the B30 cities, in the states which have been neglected over the past few years.
Maharashtra is contributing around 41%. It has the financial capital of the country as well. So no wonder that is the number coming in from there. But Abhishek, in that case, since we are seeing concentration only to few cities, a few states, are more measures or steps needed to ensure more attention by smaller cities in mutual fund investments, or are current steps enough? How does the growth in mutual fund investments in these geographies compare versus, say, previous years? You did indicate about yourself, but have you seen some changes over years as well?
Oh, yes, definitely, Sonal. I think there have been tremendous amount of changes. The stone gets set from the regulatory perspective, right? When the categorization set in, I think for people to be able to benchmark it properly became very, very easy. And I think today when you go to B30 or T30 for that matter, people are able to easily recognize the categories and hence the risks that they are taking within that categories. Having said that, I did mention, mutual fund sahi hai, and we will need to do a lot of work in terms of kitna sahi hai, kaise sahi hai, or kyun sahi hai. I think there is more and more education that is surely required, and more so in the smaller cities, because a lot of new investors are coming from these segments, these territories, and it will be important that we handhold and educate them more than the people who have already been there. So clearly, I think that is something on us, Sonal.
Abhishek, I'm glad you added those 3 more questions to the statement mutual fund sahi hai, because people usually stop at sahi hai. Nobody asks kaise sahi hai, kitna sahi hai, and more on that. Because as you said, there is a lot of awareness required, but people should question where and how and when they should be investing in a particular product or not. Rushabh, let me come to you. What do you think if in case more measures are needed to ensure more attention by smaller cities in mutual fund investments, what can wealth advisors do in this case?
Sonal, we are just 4 crore 46 lakhs unique investors in the mutual fund industry. If you see the country's population of 140 crores, we are less than 10% penetration. So we have a very, very long way to go in terms of the West, especially in the US, which is around probably more than 45-50% at this point of time. I think financial literacy at the grassroots level is something very important. In schools, we are not taught, or at least in our times, we were not taught, how personal finance was, how to, the basic nitty-gritties of investments and personal finance. I think in today's time, things are changing, but it has to be added like a proper curriculum officially in schools and colleges in terms of how to manage your finances. I think this is something very important. So financial literacy at the grassroots level is something very important. Second thing is documentation, from going from physical to digitization is something very important. We have seen we are currently in a big KYC mess at this point of time. But I think at the AMC level, AMCs are doing a fantastic job at this point of time in terms of digitization, in terms of, you can invest with a click of a button at this point of time. But more, in terms of KYC and other documentation work needs to be in terms of digital mode rather than physical mode. And, at this point of time, I would like to mention that, we are 200 lakh crore into fixed deposits, right? Compared to 55 lakh crores, which is in mutual funds. So we have a very long way to go. As a country, we are very good savers, but we are not good at, in investing. So we need to be good investors in order for, our financial growth and for the economy to grow substantially.
Okay, all right. So both of you echo the same idea that we need to increase more awareness here, and as Rushabh pointed out, financial literacy at the lower levels is required. And KYC, I think that's a discussion for a different episode altogether, because of the changes that have come in from 1st of April. A lot of people have spoken about how they're not able to invest or not able to redeem despite having done KYC earlier. Gentlemen, it's a very interesting chat, but we have to get into a quick commercial break. On the other side, we'll continue our discussion with Rushabh and Abhishek on mutual fund investment trends in smaller cities versus big cities. Stay tuned for that. Welcome back. You're still tuned in a Mutual Fund Corner on CNBC TV 18, and this is an interesting discussion where we are talking about what's happening when it comes to mutual fund investments in smaller cities versus big cities. And so far, we've seen that around 19% of the assets under management are coming in from smaller cities versus 81% for bigger cities. And the mutual fund industry's asset under management are at 53.4 lakh crore rupees as on March 2024. Abhishek, we are talking about distribution, right? And one of the things that has changed over the last couple of years is that big digital push. Tell us, what is the role that fintech apps are playing this year? Are you seeing more distribution via them?
Definitely we are, Sonal. I think fintechs has been a very, very interesting place because, Rushabh did point out about education and the access. I think the access part of it surely gets very well taken care by fintechs because onboarding is one of the largest costs for any distributor to be going and hunting for a new client. I think fintechs make it easier and scalable. As far as education is concerned, I think fintechs have come a long way in the last 4-5 years in terms of also making sure that the communication lines that they keep open with their clients and let's say prospects is making sure that there is a lot of two-way communication that is happening between them. So fintechs have clearly helped, and there's no doubts about it. In fact, incrementally, if you were to think about it, there is more and more reasons to believe that fintechs who are into educating customers, whether existing or prospects, are incrementally going to take more and more share out of the incremental pie.
Okay, all right. Rushabh, come in on this. What is your take here? And how does it compare with the traditional system that we've been seeing?
Sonal, I agree what Abhishek had to say, because the whole digital process has been so easy for all investors, and there's so much of data available out there through social media and through various websites like Money Control and Value Research and etc. So, investors, it's very easy for an investors to, invest with a click of a button, Also, fintechs offer direct plans, so it's more cost efficient. Also, a lot of people have understood, what, it takes, the power of compounding and saving cost over a longer period of time. It's a big amount, But at the same time, see, Sonal, I mean, you cannot replace a well-qualified and an experienced advisor or a distributor, right? Because see, just like a family doctor, your family doctor helps you in catering to all of your medical needs. I would like to believe we behave like a financial doctor in our clients' lives. At any given point of time, even at midnight, we can pick up the call and answer all the queries for our clients, which, fintechs may not be able to do that. Fintechs are more like a robo kind of platform for the investors out there. So I think, see, fintechs both have their pluses and minuses, but of course, being an advisor, being a distributor, I think I would like to believe to be like a financial doctor in my clients' lives.
So you're talking about the personal touch, which is important because everyone's experience, risk-taking capabilities, they could differ as the time goes by. Take that point, Rushabh. Abhishek, let me come to you. ETFs is also gaining popularity. Are you seeing that as a product which is gaining a lot of traction in smaller cities as well? And also in terms of age group, are you seeing younger millennials or Gen Zs looking at it?
Yeah, so that's an interesting one, Sonal. And I think that's one segment where the headline actually hides more than what you can actually see in terms of the other segments. So 9 lakh crore of approximate assets in the ETF index fund part of the business. If you were to break it down, you'll be surprised that about 90% of that assets is institutions. So there's less than 10% of assets which are subscribed by individuals. And then if you go into B30, there will be even less. So clearly, I think ETF is not the first choice for individual investors or for that matter, new investors coming from B30. But yes, when you start looking at it from an age bracket perspective, a lot of do-it-yourself investors have started preferring ETFs and index funds. So maybe over the next 10 years or maybe 5 years, the trend can accelerate and you will see a larger play coming in from a ETF and index fund perspective. But as of now, clearly, I think the data suggests that, that it's not the first choice.
It is not the first choice. But, you did help us with the table as well, how there has been a rise in passive mutual funds, the other ETFs, which have grown by around 37% in terms of asset under management. There is index funds, which have grown by 27.5%. My director will help with that table as well, because that's an interesting data that we got recently. The gold ETF picture, that has seen an increase of 37% on a YY basis. And fund of funds, as Abhishek was mentioning as well, that one has increased 11.8%. And the share of passive funds has increased as well. There you go, from 7.4% in March 2020 to 10% in March 2021. And there you go, we did see that big surge in terms of demat accounts, folios increasing, and it is at 17.5% right now in March 2024. So let's see, as Abhishek was pointing out, yes, a different age group is looking at passive funds or ETFs, but there's still a lot that needs to be done here. Rushabh, let me come to you. Are the small city investors contributing or participating via the SIP route, or they invest at one go and then they forget it?
Sonal, I think they are contributing more towards the SIP route. The pure reason is, even though we are the fifth largest economy and heading towards the third largest economy, by 2030, 31, but the per capita income of our country still remains very low. Around $2,200 is the GDP per capita income at this point of time. So, of course, there is not much, especially for retail investors out there beyond the top 30 cities to pour in that much amount of lump sum money, in the investment pool. Just a small data I would like to share is that, the SIP share of the equity AUM has risen substantially to around 30%, which also clearly indicates that more number of investors are venturing via the SIP route, versus the lump sum. This is particularly, I'm talking from the B30 city point of view. Of course, if you compare it with the T30 cities, then of course it's a combination of SIP and lump sum. But a lot of people have started to understand, that slow and steady wins the race. So I think SIP methodology is something, an evergreen methodology for long-term compounding process.
Okay, so SIPs is something which, it's a term that people understand a lot, right? Abhishek, come in on this. You provided us data in terms of folios as well, in terms of how SIPs has increased as well. Are you seeing any changes in those trends? There must be a lot of market research that would go in. Are you increasing distributors in tier 2, tier 3 cities as well?
Yes to all of that, Sonal. In fact, trends have changed because, when you look at and to all the data that Rushabh spoke about, I think from an incremental perspective, I think SIP is being like a guiding light for the industry in terms of adding incremental assets, incremental folios. A lot of people have started recognizing SIP as a product in itself, not as the platform or not as the medium to be investing into mutual funds, but SIP itself has become a product. And when you have such a big fan following, clearly, I think, you see the kind of results that you're seeing right now, 31% of assets under management coming through SIP AUM and so on and so forth. What is also interesting, Sonal, and maybe it may, even at the cost of being a little out of context, when you start seeing the saving habits of all of us as individuals, you will realize that versus bank fixed deposits, mutual fund AUM has creeped to about 26%. So we are at about 26% versus the outstanding bank deposits, which means that if I have to populate that in terms of numbers, if our industry size is 55 lakh crores and bank deposits are a little over 200 lakh crores for the entire population, then we are there. And this number about 5 years back used to be maybe around at 20%. So incrementally, while that is happening, the biggest saving push is clearly coming from SIP, and SIP becoming a habit and a separate product for all investors.
Okay, interesting. And that's been an ongoing debate, right? Banks talking about losing deposits to mutual fund industry. So that's a different conversation altogether. But Rushabh, you have any closing comments on this in terms of what kind of contribution do you think would be coming in from smaller cities? And as a wealth advisor, what are some of the steps you would suggest that anyone should take here?
I think, Sonal, the number one suggestion, what I would like to make is that don't stop your SIP, whether it is in good market cycle or bear market cycle. Stick to the 4 pillars, what you have, stick to your goals, stick to your time horizon, stick to your risk appetite, and stick with your asset allocation. I think this is something very, very important for investors to understand out there, because a lot of investors out there, look at the past point-to-point returns, which have been phenomenal over the past 3, 4, 5 years, and they jump into the equity pool. I think that is not the right way to look at it. Don't stop your steps, stick with these certain pillars. And if you want to make money in the equity markets, and if you have cash in hand, I think investing during bear markets and investing during a price and valuation correction is something what I would recommend, because what we have seen is that very low to moderate returns have been made if someone invests at the peak of the market cycle. So don't get scared of the bottoms, or don't get scared of the bear markets. I think that is the right time where you need to invest more and create wealth for yourself over a longer period of time.
Gentlemen, it's been such a pleasure speaking to the two of you, and that's exactly the kind of advice investors and the viewers would need, what to do in times of volatility, in times of bear markets, and especially when markets are going one way as well. You need some sanity in terms of how to diversify your portfolio as well. Thank you so much for joining us today and telling us how investments are shaping up in smaller cities versus big cities, and what can be done to increase mutual fund penetration. And I will remember this, Abhishek, mutual fund sahi hai, but kaise hai, kahan hai, aur kab hai? These are some important questions that need to be addressed as well. But thank you so much for joining us.
Love. Thank you.
Thank you, Sonal.
Okay, all right. With that, let's quickly take a look at something that we discussed in the show today, just as a synopsis. There are 53.4 lakh crore rupees of assets under management in the mutual fund industry, out of which 81% share is coming in from top 30 cities, and the rest is coming from beyond 30 cities, that are the smaller cities. And this is a categorization by AMFI itself. And in terms of individual AUM, which consists of HNIs and individuals, 75% of that AUM is coming in from the top 30 cities and 25% coming in from the B30 cities. Also, in terms of folios, the new folios that we talk about, 17.79 crore mutual fund folios exist as on March 2024, out of which 55% come in from T30 cities and 45% come in from B30 cities. So yes, the number in B30 cities is increasing, but the value might be lower, and that's why asset under management from that particular geography is lower compared to the T30 cities. Also, in terms of SIB contribution coming in from beyond 30 cities, it has been around that 45 to 46% mark, which is not a bad number at all. March 2021, it was around 45%, and now it is at 46%. Okay, with that, we'll take your leave on this edition of MF Corner today, but do stay tuned for Closing Bell to take you through the last hour of trade.